All right, welcome back to Talk Tickers. Today we are digging into the latest operational update from J&T Express for Q3 2025. This is a logistics giant that's been making some serious waves, not just in Asia, but all over the world. So let's just cut right to the chase. This is the number that really jumps off the page, the number that dominated the entire conversation on their call. A staggering 78.7% year-over-year growth in parcel volume. And that's in their core Southeast Asia market. I mean, that's not just growth, that's explosive. All right, so for our first section, we're going to take a look at the results. And it's a story of two halves, really. Incredible growth numbers and a pretty lukewarm reaction from the market. Let's get into it. And when you break that growth down, you can really see the story taking shape. Look at this. Southeast Asia is it's the rocket fuel here, posting that incredible 78.7% jump. But hey, don't sleep on the new markets either. Almost 48% growth there is nothing to sneeze at. And then you see China, right? More modest, 10.4%, but, and this is key, that's not a weakness. As we're about to find out, that's all part of the plan. Okay, one really important thing to keep in mind here. Management didn't actually give us any Q3 financials on this call. It was purely an operational update. So to get any kind of financial context for these insane volume numbers, we've got to rewind to the first half of the year. Back then, you saw revenue up 13%. But the really important line item here is that adjusted EBITDA, $436 million. That tells us they were coming into this quarter with some profitability already under their belt. And this is where it gets weird. You see those monster growth numbers we just talked about, and you'd expect the stock to soar, right? Nope. It actually closed down over 1% on the day. And that right there, that's the big puzzle we have to solve today. What is the market seeing that seems to contradict this amazing operational story? Okay, let's move on to management's playbook. What's the strategy here? How are they pulling this off? Let's break down what they said. Listening to the call, a few big themes just kept coming up over and over. First, in Southeast Asia, it's all about grabbing market share while the e-commerce wars are raging. We'll get into that. Then there's China, where they're hitting the brakes on that growth at any cost mentality and really focusing on profits. And finally, you've got this mixed bag in their new markets. Some big wins, some new challenges. It's a complex picture. And this quote from the call, it just perfectly sums up their whole strategy in Southeast Asia. See, you and I might look at the crazy price wars between e-commerce sites and think, wow, that must be tough for logistics companies. But J&T, they see it as a golden opportunity. It's like a stress test. The intense competition squeezes the smaller, weaker players right out of the market. And who's there to pick up all that business? J&T. It's brilliant, really. Now, over in China, it's a totally different story. The playbook has completely flipped. Management basically said on the call, hey, we're okay with our volume growth slowing down, even if it's a little less than the rest of the market. And you might ask, why would they do that? Well, because the name of the game is no longer just volume, it's profitability. They're focusing on getting a better price per parcel, that's your ASP or average selling price, and going after bigger, better customers. It's about quality over quantity now. When you look at their new markets, it's really a tale of two very different stories. You've got Brazil, which is just on an absolute tear. They've partnered with new e-commerce platforms and have seen their order volume just explode from a few thousand to, and I'm quoting here, hundreds of thousands of orders. Just incredible momentum. But then you flip over to Mexico and they're running into some roadblocks. Higher tariffs on stuff coming across the border are putting pressure on the business, and management themselves called it a challenge. So one step forward, maybe a half step back. Okay, so let's circle back to that big question, the elephant in the room. Why did the stock shrug off these amazing numbers? Let's try to read between the lines and figure out what the market is really thinking. Seriously, this is the question every investor should be asking. You got these fantastic operational metrics on one side and a slipping stock price on the other. What gives? Why the disconnect? And really, it all boils down to this classic bull versus bear debate. The bulls are looking at this and saying, look, they're crushing it in Southeast Asia, they're getting more efficient, they've got cash, and they're buying back their own stock. What's not to love? But the bears have some pretty good points too. They're saying, wait a minute, where are the Q3 profit and loss numbers? We don't know if this growth is actually making them any money. And let's be honest, the stock had a massive 56% run-up this year already, so you can't blame some folks for taking a little profit off the table. All right, so where do we go from here? What does this mean for investors? Let's get to the bottom line, our thesis, our rating, and even a little trade idea. So, if you're watching this stock, here are the things you absolutely need to keep an eye on in the near term. First, Q4 is peak season. You've got Singles Day, all the holiday shopping. How do they handle that massive volume? Second, they've got a huge new automated sorting center opening up. We need to see how that impacts efficiency. And of course, the big one. When we finally get the full year numbers, what do the profits look like? That's what everyone's waiting for.
And all that uncertainty from the market really boils down to this one simple concept, P&L conversion. It's a fancy way of asking, that's great you're shipping a ton of packages, but are you making any money doing it? The market has seen the growth. Now it wants to see the profit. It's a classic show me the money situation.
So, with all that in mind, we're slapping a market perform rating on this one. Look, the operational story is just fantastic. You can't deny the momentum. But until we get that concrete proof of profitability, until the financials catch up to the volume story, we think it's prudent to stay on the sidelines a bit. We need to see the numbers before we can get more bullish.
Okay, now for a little something we call the outrageous but plausible trade idea. It's a direct play on that consolidation theme we talked about. You set up a pair trade, you go long J&T Express, betting that they'll keep winning, and at the same time, you short one of their smaller regional competitors. The idea is that as J&T's scale puts the squeeze on everyone else, you win on both sides of the trade.
So I'll just leave you with this one final question to chew on. We saw them flip the switch in China from growth to profit. So what happens in Southeast Asia once all these smaller competitors are gone? Once J&T is the last one standing, or one of the last few, will they be able to flex their pricing power? And could that be the next huge story for the stock?
This is not financial advice.